Welcome to the NWR Near Term Producers Conference. My name is Kerry Stevenson, and next up we've got Tietto Minerals. ASX code is TIE. Joining me today is Mark Strizek. He is Executive Director. Now, I've spoken with Mark before. I'm excited because just yesterday they've raised 130 million in a placement, and that is going to fully fund this project. So Mark, before I get too excited, over to you to tell the story of West Africa's next gold mine.
Yeah, look, thanks, Kerry, and look, thanks everyone for jumping in. Look, a very exciting story, and you know, some news there. We're really over the moon to be able to bring some new investors aligned with our strategy, and that's the key. Is we've been you know, very crystal clear about obtaining first gold at the end of this year in Q4, and that's what this will allow us to do, is to be able to keep, as I say, the pedal to the metal and moving there. And as we walk through the slide, you know, we've got a lot of activity happening on fronts. The development is growing well. That's led by Matt Wilcox, and we'll talk about, you know, because we've moved early last year, we've been able to take advantage of, I think it's almost a lull before the storm. So we're able to lock down a lot of equipment before escalation, getting access to engineers. Currently, we'd be looking, if we were you know, taking the conventional route, we'd probably be a couple of years out before we could get this. I mean, just to give you, talking to some of the engineering houses, one in particular had about 200 people working for them last year. They've got 800 now. So there's a real you know, jam in terms of being able to get an escalation. And thankfully, you know, we moved quickly last year, appointment of Matt, and you know, we're on track, and we'll show some photos. And you know, these things, you know, if you looked at some of the previous presentations, you can just see how quickly things are moving there. So yeah, look, that's a little aside there, but it is exciting. So as we said there, it's really this key, having investors aligned with our growth strategy. Next year, you know, it's going to be a big year, and we'll talk about that production. We've got an ore reserve there of just under 1.5 million ounces. That came from a DFS that was delivered in October last year. Last year, we also, in April, had a PFS. It just gives you a cue as to, you know, how quickly we are moving this project forward. Ore reserve, the resources, that ore reserve was based on a resource update in July 21. That's currently being updated, and we expect to have some news flow on that. Probably, if it's not the end of this week, it'll be early next week. So, you know, we're on track for that. CapEx, I think that's one of the keys, and that's what I was alluding to. We've spent US 41 million. We've got about 155 to go. That includes you know, mining contractor establishment. Also, we've got nearly 50 million of owners' costs in there. Our understanding of the CapEx, as it says, it's firm intended, and we have been able to you know, avoid real escalation that others are seeing, and that really goes down to the leadership of our CEO Matt Wilcox. You know, joined us in February last year from that build in San Brado. And you know, Matt's been working, you know, from from that appointment, putting in place, working on innovative structures with mechanical equipment. I think the key was, yep, we were able to secure prices before the big escalation. So we're tracking towards that gold pour at the end of the year. I think the other area we had, and got a lot of interest on this when just recently in Miami for the gold mining conference with BMO, and you know, people, investors there just couldn't believe that resource number, sorry, the driller out, as we're looking on that resource, 1.1 at over 2,853, incredible number. And the key, again, rapid resource growth from 100,000 meters of drilling a year with our own drill rigs at US 35. So protection to our balance sheet, but importantly, you know, in this game, you have to drill to grow. And, you know, we've got some great targets to look after. So, you know, this is where we'll land post the placement, so you can kind of see where we are. I think the key is the enterprise value. It's still undemanding when you look at what we have on offer, and we'll talk about some of the financials there as well. And when you look at projects, you can see the share price has been moving, but that appreciation really comes from that delivery of that gold production. And you think of something like West African Sombrado. So along the recent placements, we've got T Rowe have come on board, and I think that's the key. Is we've got long-term, you know, gold long investors that are really excited about the opportunity of a new gold project coming in on stream in West Africa with big production, and also a lot of exploration upside. Just I think you know who we are. We've got the right kind of skill set there. Kagan's in Côte d'Ivoire, working and driving things there. Obviously, there we've got a good team, and we all are shareholders as well, very much aligned. So these are some of I guess the numbers you can see in production. And just if you haven't heard the story, that first year, 260,000 ounces at $651 an ounce, and that comes we able to take advantage of the way that the ore body presents. And with our mining, we'll talk a little bit more about the plan. So very strong 6 years at 804 US, that ore reserve. And that's one of the keys here. It's at US 1407. So we're almost 500 plus below the current market spot price on gold. And that's sitting inside. We've got a life of mine plan of 1.7 million ounces, including about 18% of inferred material. And we expect that some of that inferred will be converted from this recent drilling that we've completed. So I'll talk a little bit more about that. The financials, so there's the US 1407, still very, very healthy numbers. When you start looking at the 1900 numbers, these are 100% project, 100% equity project, throwing out a lot of free cash. And this is what's really exciting about this pivot to equity funding, is that the cash flows next year, instead of flowing to a debt provider, flow to shareholders. So we're still working our ways, but in terms of the NPV, there's a potential big uplift on that, and the board's potentially looking at opportunity of return of capital as well. So 23 shaping up to be a very big year, and that's the key. So we'll talk about early production, and I think with the next slide, this starts to help understand how we're able to move and deliver those really high golds. So the key, number one, mining the high grades first. It's obvious. The other aspect, we're able to use the ore body to our advantage. Number two, you defer waste costs if you can, and you'll see in this large AG core pit, we've got what's called cutbacks. We also, number three, we mine faster than the mill can process. And what that allows us to do is to elevate cutoff grades in the early years and it's all about bringing cash forward. We put lower grade material onto a stockpile. So I'll just kick that off. It's only 30 seconds. You'll see all those things in motion. So there it goes there, those early cutbacks, chasing those high grades. And then we're leaving this last cutback to defer some of those costs, and now starting down to mine that. Other aspect you'll see, we left about 40,000 ounces on the table here. We see opportunity. Currently, we don't have hand on heart, have an engineering solution. There's a small creek there as well. But this is a well thought out mine plan supported by geotechnical drilling. You can see there's a little, what they call a break slope there, geotechnical berm, multiple ramp access. So, it really allows us to have a lot of confidence in the mine plan. And I think with the potential resource the resource update coming out next week or so, you'll see that some of these inferred material will be coming up. The other aspect you'll be starting to see on this mine plan is that influence of that measured. But this really shows us it's unashamedly front-ended, bringing as much cash forward as possible from that high gold production, 260,000 ounces at a head grade of around 2. That's that elevated cutoff that we talk about in the mine plan. We see some opportunity here where we've got some feed that's coming from APG down the road. We'll be looking at updating the mine plan, and we may see that more of AG coming into that, and that material could be deferred, some of that lower grade material. The back end, look, it's all about the drill bit. We've got a lot of exploration targets to go after, and we'll look at that and be able to provide some color as to where we believe some of these ounces can come from. But as we talk about, look, the whole AG, APG, they're all open at depth. We've got a lot of upside along strike. There's potential, when we look at that 1407 gold price, looking at these reserves at potentially high gold prices and see what that could do. And the other aspect, the mill we've got, there's a lot of capacity in it. Our ore is very soft. And we know that from the plants that Matt's built, Sembrado is a perfect example. I think the nameplate was 2.25. It's doing 3.3 day in, day out. So there's opportunity. There's potentially, it's built with about a 20% operational margin on it. So good chance just to run you through the project. Look, one of the keys, we moved early last year. We were able to secure a mezzo mill. It was unused. It was bought for a project in Mount Isa. So that saved us about $3.5 million US. It's been fully refurbished, as I said, and it's currently shipping to site for installation in Q3. Very simple flow sheet, gravity, a lot of gravity from our test work, about 80%. In the process design criteria, it's currently sitting at 65. We've got 2 Nelsons in the front there, so we are anticipating a lot of free gold. And even we see that in our test work down at low numbers as well. This is an ore that is very undemanding metallurgically. It's very, very soft compared to our competitors. Fresh material between 10 to 11 kilowatt hours. That's a measure of how much energy, which is how much cost you need to use to grind it down to what is a very coarse size. So in terms of energy, we're roughly about 30 to 40% less. That number 10 to 11, to give you an example, most West African ores are between 19 to 25. So that's more cost. The other aspect, our ore liberates, it's all free gold. We're using about 150 micron. Typically, West African ores are down to 75. And when you look at that, the power curves are almost exponential. So that's dollars in the pockets of our shareholders. So life of mine, about 96. So talking about dollars, as we said, we've been able to beat the price, right? The significant price increases and delays that companies are experiencing now because we moved early. We believed in our project. We could see that we had a very significant resource base. And Matt and the team have been able to secure mechanical equipment. So these numbers are firm attended. It's plus or minus 1%. We're looking at about 155 to go US. And that's made up of, there's also a part, aside from the plant and infrastructure, which is probably about 140 total. We've got around about 15 million or so of our costs. We've got mining in there, which is site establishment of about 18 as well. So the key is we're moving ahead, and this recent equity raise allows us to keep to our schedule of first gold by the end of the year. So the construction's all started. We'll talk about that. We're working on the power line, and again, this is one of the keys of the strength why we've got very low operating costs, is that we are connected into a hydro grid power, so it's green energy, and it's about US 12 cents a kilowatt hour. Operationally, it could be a little bit less than that. To give you an example, if we're on HFO, we'd be looking at about 25. So our power costs are about half of what you would typically doing in West Africa. That's why we've got a very competitive project. Mining contract has been selected. We had some very good choices there. Very happy with the guys, EPSA, that have come on board. And importantly, we are, as you'd expect, we're licensed from the mining to environment. And we've recently, Kagan's concluded, so we have the mining convention on foot. There's a couple of little things that are unique to the project that we're asking for, but that's what we're operating under now. So, this is the key. And these slides, if you go back and look at the presentations and you see our monthly reports, things are moving very quickly. We've got a very professional build team. We're working with experienced West African contractors. We don't have the cost escalations because we're able to get in there early. And West Africa, it's not the Pilbara. There's a large workforce that's available. We're able to draw on, and Matt has worked with these contractors, for about 4 of his build projects previously. And you can see there, that's the SAG mill foundations going in, the CIL. We've got 8 tanks in there. Volumetrically, things have been sized for about 5 million tonnes. So we do see upside on this, and we've got our large resource base to feed into that. Building the mine camp accommodation, around about 15 rooms will be coming online every couple of weeks. And there's the TSF. And as you'd expect, look, aside from mining equipment, from a conventional hire, we've also purchased, we've got 14 of our own 65-tonne trucks and 2 Hitachi excavators. And that work's being supervised by Guillaume, who's got a lot of experience working with Matt. So think of Regis, the Emerald guys with their build. We've got a very strong builders team, and you can see there in the progression. In terms of upside, that's one of the keys, the takeaway. We've only scratched the surface. It's about 10%. And I'll give you a helicopter view. We've got 70 kilometre of strike. We've got parallel structures. We've only really worked on the middle one to date. And you can see the centre of gravity forming around that mill. And I'll show you in some of the other slides there that we've got about 20 targets to be tested within 10 kilometres. So there's a lot of upside here. And the key again is our drill capacity, 100,000 metres at US 35. No one can really do it as cheap as we can, and throwing out 100,000 metres a year. And you've seen how fast we've been able to grow our resources from IPO, 700,000 ounces to 3.35. And we're currently expecting another resource update, and that'll take some risk out. We've been very clear on our guidance. It's not about the growth, it's about the confidence. And that drilling, that was completed. The RPM guys are just finalizing the resource update, and we'll have that out by, I'd say in the next week or so. So it's moving very, it's in line with our expectation. We expect measured resources to be declared. You can see most things have been going in line, and the feedback I'm getting from the geologists interpreting it is that they are happy with the progression, and as per our guidance, we expect to see some measured. We have had some surprises, including that 1.1 at 2,853. So that's going to be, we'll see how that impacts on the mine plan. But one of the keys there is when you think about top cuts of between 50 or 60, you're probably only including about 5% of the value of that number. And importantly, there was still 12 at 12 underneath that. So this is a very high grade shoot. This system is all open at depth. You can see the measured drilling going in there across that inferred 25 by 25 meter line spacing down to 220 meters vertical. That's 2 years, 60 plus 60. AG South is still all open, is still all it indicated. We'll be putting some holes into that. And that's one of the keys as you start looking just around the mine site. Oops. And you can see there, where we're sitting in terms of it's all open. I just noticed there that the sound might have gone off. This is a key. It's open. You can see the detailed drilling here. Underground, it's still widely spaced. But the tenor and the width we're seeing suggests that there could be an underground in the potential. Before that, there's a lot of open pit ounces to add. It's a target-rich environment, as you can see here. We've got some of the numbers from these prospects that have come from on the east and west. And I think the takeout you can see there, we still haven't completed drilling between AG and APG and also up to the north. So a lot of upside. And that's kind of the key here as well, just to give you that helicopter view. We've got 3 tenements. We've only really worked on the middle tenement. We've got some drill ready targets down in the south at Issia. We own 100% of that. We've got Gamina in the north there. We own 51, earning 80%. Obviously, license to operate, very important. That's Fred Nkanza, our country manager. So providing some opportunities for geoscience masters graduates. The key is, we've been working in country. Tietto's been there since 2012. We got on ground here at 2014. There'd been no systematic exploration. We've got a very strong team, and we've got buy-in from the local community, the local administration, and up at the senior the national government as well. So obviously, as in Australia, here in WA, this is all about jobs, taxation, royalties. An incredible opportunity for the Ivoirians. At 1407, the tax take and royalty take is about $370 million. This is a project that creates significant value, and for us as shareholders as well, as we talked about when you looked at the numbers and the free cash. So there we are. We're moving very quickly. We're moving systematically and professionally towards that first delivery. None of the goalposts have changed. It's just the way that we get there, because we didn't want to see any slowing in our pace. So there we are. So gold at Q4, we've got that resource update, which is pending and it'll probably be delivered next week or two, and another resource update, which will be focused on resource growth at the end of the year. A lot of works, and there'll be few updates on our progress. And you're seeing already we've had up to 4 updates coming out on that. So we've got a very competent build team. So look, it's a simple story, 260,000 ounces gold production in that first year. Project throwing out a lot of free cash. And importantly, that instead of being diverted to debt repayments, that cash becomes available for shareholders. 23 is going to be an exciting year. So look, thank you very much for your time.
Mark, once again, a great presentation. We've got lots of questions here. I've got some online and some that have come in before. Let me just start with the first one. You just raised the 130 mil to fund Abujar through to production with no debt. Why did you decide to take that path rather than a debt financing facility, given you've got very strong project economics in the DFS?
Look, it's a good question, and the board, as we looked at, being able to stick to our deadline, there'd been a lot of strong responses from our presentation in Miami, and there was the opportunity. There was investors that wanted to come on board, that shared our growth strategy. and in the end, we think it's it's a good result that takes some risk on not being able to meet that time frame. So look, it's as we look at it now, we're really excited about the having these new shareholders on board, as well as our existing ones that are really excited about that first gold production next year.
Well, you've certainly been putting the drill bit into the ground, which is something that I think is so important. But you've got construction underway at Abujar, but how confident are you, Mark, that you can deliver on time and I guess on budget and on schedule, given the impact of the old COVID-19? And also we've got some other world events going on at the moment. Is that potentially going to lead to any cost delays, cost rises?
Look, as we're looking at it, and that's what I was trying to allude to, is that we were able to lock in prices prior to the big escalations that we've seen. And that was the work that Matt and the engineers from Primero were doing last year. So the number that we're talking about for the total project cost to production is very well understood. It is at a plus or minus 1% level, and well within plus or minus 5%. So that's key. Equipment timelines and build timelines are controlled by the contractors. Equipment is arriving on site in an orderly manner. Materials, as we said, the mill is now on a ship heading on its way to Abujar. So those timelines are pretty well locked in. And again, it is that key of being able to, having the belief in the project and moving quickly last year. And it's that time, cost of money, the opportunity. If we'd waited for a conventional route, potentially this project wouldn't be built for 2 to 3 years. So, look, I think we made the right decision. We're high conviction, and we're not seeing those delays. There's a number of items that, in terms of relatively small componentry, that Matt is looking at, but we do believe we are on track for that first gold in the end of the year at Q4.
All right, I've got there's so many here, but we're running out of time. I do have somebody saying, with regard to the announcement yesterday that you've raised the 130 million, he's asking, why was this not in part done by way of an entitlement or an SPP, given small shareholders missing out on the opportunity to take part in a capital raise? It's kind of not elusive.
Look, I understand that, and the board looked at the options. We looked at our previous SPP, and where the price is now is still very close to the issue price. So there's opportunity. In the end, the board looking at all the options. At this stage, the certainty on the project, funding, getting that funding, moving it ahead was paramount.
All right, Mark, we have run out of time. It's a fantastic project. Somebody here has just said, congratulations, Mark. Had to share that one with you. Ladies and gentlemen, ASX code TIE, they are powering ahead, and that all-in sustaining cost of $651 per ounce, given the dollar gold price is now 1,900. This is going to be spinning off a lot of cash as they come into construction and development. Mark, thank you so much for joining us at the NWR conference today.
Thank you, Kerry, and thanks everyone for listening.